As you're searching for a financial advisor, it's important to know who's a good fit for you and who can do a good job and who you can trust. So a way to figure out a lot of that is to ask some questions. So I've got an article with questions on my site. We're going to go through those now. I'll also pick out a couple of questions from other websites as well. But we're going to talk about what should you ask and why exactly are those questions so important. The first question is if you are a fiduciary. Ask the advisor, are you a fiduciary? And you might also add, are you a fiduciary at all times with all clients? So a fiduciary is required to put their client's best interests first. They are supposed to reduce conflicts of interest and disclose to you any conflicts of interest that simply cannot be eliminated. So a fiduciary can't, sell you one product because that product manufacturer is offering them a vacation if they sell a certain amount of product, for example. A fiduciary, again, is legally obligated to act in your best interest. They should just tell you exactly what they're going to charge you, and then they'll charge you that. And that's exactly what you should see on your statements or on any invoices if you're just doing flat fee financial planning. So there shouldn't be any surprises there. The reason I mention asking about are you a fiduciary all the time is that some advisors can be sometimes a fiduciary and sometimes not a fiduciary. And instead, when they're not a fiduciary, they can be acting in a suitability standard, which is more of a sales role. They just have to sell you something that, kind of makes sense to sell you at that point in time. But a fiduciary standard is a higher standard. And if somebody can be both, this doesn't mean that they're bad people, but it can open the door to some complications and some temptation. So if you just want to eliminate that, you might work with somebody who's a fiduciary at all times. The next question is, how do you get paid? And so you're asking about your advisor's compensation, and you're going to learn how exactly you're paying them, because you are always paying somebody, even if they say something like this has no fees or something like that, you are always paying somebody. So a couple of different ways that advisors can get paid, and we can break it down into a couple of categories to start. One is called fee only. Next would be a commission-based advisor, and the third would be a fee-based advisor. So a fee-only advisor, one way to look at that is that they cannot earn any commissions. What they do instead is they might charge, and I happen to be one of these, we might charge a flat fee. So that would be for some financial planning, for example, or hourly fees, or might be an assets under management fee, where we take a percentage of the account value each year. Some advisors do fees based on complexity or on your net worth, or they base the fee on your income. It's based on some percentage of that. So those are a couple of different ways that you might work with a fee-only advisor. And the way those work is, they have to, again, show you the fee, and that's exactly what you pay, and you see it on all your invoices, and it's pretty straightforward. The other approach would be a commission advisor, and as it sounds like, that's where they get paid if you buy a product that pays a commission. So that might be a mutual fund or an insurance product that pays them a commission. Are these people necessarily bad? No. But as you can imagine, there might be some incentive to have you buy a product, right? Where a fee-only advisor can say, look, you don't have to transfer money to me. We can just work together and I'll give you advice and you can leave your money where it is. A commissioned advisor only gets paid if you actually buy their product that they are allowed to sell and get a commission on. So that can cause some complications, but again, many of them are good, honest people. Then next, you've got the fee-based world. Fee-based is a confusing term because it kind of sounds like fee only, but it's not. So fee-based is when an advisor can either work for an advisory fee or a flat fee, or they can sell you something for a commission. So a fee-based advisor has both of those options. So with that, you want to be very careful and make sure you understand which one you're working in. Are you working in an advisory relationship, or are you working in a commission relationship? And that can switch, and so you want to just make sure that you're keeping track of that as you work with those advisors. The next question is, how long have you been working directly with clients? And this helps you get a feel for what's the advisor's experience dealing with the types of problems that you might have. Now, some advisors might be newer to the industry and they have lots of life experience, and that can certainly be helpful because maybe they've gone through or are going through many of the same things you're going through. But if you prefer somebody who has a lot of experience working with clients and doing the things they're going to do for you, then this is a way to find out. And ultimately, it's just up to you to choose if you want somebody with experience or somebody who doesn't have as much experience. Next is, how often are we going to review my finances? How often are we going to meet and talk about things? So with almost any relationship, in the beginning, there is a lot of upfront work. And that's where you're doing a lot of data gathering. There may be some analysis. There's paperwork, maybe to move assets over. There's gathering your social security statements and just getting everything figured out. That's a lot of work up front. But what happens after that? The question is, are you working with a one and done advisor who sort of gets you set up and then puts you into a product and you never hear from them again? And maybe that's what you want, maybe that's okay. Or are you working with somebody who you'll have an ongoing relationship with? And if that's the case, the question becomes, what's that relationship look like? Are you talking every week? Probably not. I don't think you want to talk to your advisor every week, but maybe you do. Are you talking every month or every quarter? Is it when important things come up? Do they require you to have meetings at a certain interval? Those are the types of questions you want to ask, and that'll help you get a feel for what the experience will be like. Next is to ask about the advisor's regulatory background. So have they been disciplined? Have they been criminally charged? You want to know, do they have any problems in their past? So this is certainly a question to ask, but it's also something that you want to look up on your own. So you would research the advisor by searching for them, maybe a web search. You should also go to Broker Check and check them out. So Broker Check is going to have a listing of some regulatory documents that might tell you if they've had any disciplinary action and that sort of thing. You can also look at an advisor's Form ADV, right? That's a disclosure that they should give you. And that should also include some important items that you might want to know about. But if an advisor has a clean regulatory background, that's generally a good sign. If they don't, or if they have something in their history, you might ask them about it and see what they have to say. And if it sounds good to you, then it's okay to proceed. But in general, it's nice to work with somebody who has not been, charged with embezzling money or doing those sorts of things. Next is, what kind of experience do you have with the problems like mine or the issues that we're going to be working on together? Your advisor or somebody you're talking to might be a very, very smart person. But if they don't do the particular area that you need help with, then it might be difficult for them to do a good job. It'll be time consuming. They might miss things. In general, if you have something that's complicated, you want to work with somebody who focuses on that area. So if it's student loans, it's good to have a student loan expert. If it's retirement, it's good to have a retirement expert. And there are a bunch of other examples, estate planning, for example. So get an idea of how much they do, what you actually need the most help with, and that way you can pick the right person. Next is to ask what education and what certifications you have. So these might be professional designations that your advisor has. For example, the CFP, or Certified Financial Planner, is considered the gold standard for a lot of financial planning. So that's a difficult one. When I did it, I had to do a 2-day long test in person, and you have to cover a lot of different areas. You have to do ongoing continuing education. You have to meet a number of other requirements. And that's a good way to know that your advisor is dedicated to the space and that they have met some hurdles and that they can demonstrate their competence in a variety of different areas. CFP isn't the only designation. There are others out there. What you want to do is be careful about ones that are maybe very easy to get. It's kind of like an online degree. You can pay a fee and get something. Some of those are listed on the regulator's sites. I'm not going to name any of them, but sometimes they might focus on, for example, seniors. Those sometimes raise some eyebrows, and some of them are good. but you want to be very careful with what designations people have. And then, just look at people's education, background, designations, and make sure that fits with what you need. Next is, can you help me with other things besides investments? So traditionally, financial advisors only work with investments. And if you want to ask them about, your loans, or should you refinance your mortgage, or can I do Roth conversions? Does that make sense? They might not have much information on that. They might not want to talk about it. They might not be allowed to talk about it based on whatever companies they might work for. So you want to really find out is, can this person help you, again, with whatever your questions are going to be. If you only need investment management help, a lot of people can help you with that. Again, you can ask the other questions to find the right fit. But if you do want a bigger picture view and get a financial plan and that sort of thing, then you might want to find out what exactly they can talk about with you. Next is, what is your approach to investing? What strategies do you use? What philosophy do you have? What do you believe in? That sort of thing. So a couple of questions I have listed here are, do you use individual stocks and bonds, or do you have it kind of spread out and diversified into mutual funds and ETFs? Do you believe in active or passive investing, or some combination? Do you get tactical? How often will you trade in my accounts? Is this going to be going on every other day? Is it once a year? Just get an idea of what might be happening in your accounts. That can affect how many confirms you get. That can affect tax consequences. It can affect a number of different things. Will you pay a fee every time they trade, or do you pay if you move from one investment to another? That's important to know. Where will the money be? Another way to ask that is, what custodian do you use? In general, you might not want to give money directly to an advisor personally. If you think of like a Bernie Madoff situation, that can enable that type of thing. I happen to use Charles Schwab and TD Ameritrade as custodians. So any money, any checks you write, anything that happens, it happens over there. So you're not writing checks to me personally. Just beware of any advisor who wants that. Can I set restrictions on my investments? If you want to limit the types of investments that your money goes into for whatever reason, and it might be that you want to use socially responsible investments, or do things that are good for the environment, that type of thing, you can absolutely do so. Another question, semi-related, is going to be on financial planning. So what is financial planning like with you? So you would ask, what information do you need from me? How long does this whole process take? What should I expect? There's no right or wrong answers. It's just, this is helping you get some information. What will I receive? What is the output? Is it a one-page summary? Is it a 70-page volume that's really just going to be a doorstop somewhere? Maybe you want all those details. You can get them, but you just need to find out what you're going to get, what to expect. Do you provide investment advice as part of the financial planning engagement? So are they just going to talk about, here are some numbers, but I can't give you investment advice? Or will they say, here's a suggested allocation, here's a good way to spread out your money according to whatever your goals are? What happens during life changes when I need to make an update? How do we do that? Is this like a one-time thing and then we start from scratch? Or can we do regular updates? Do you offer one-time plans? Do you only offer one-time plans? Or is it always ongoing, or what's available? Just get a feel for what types of engagements are available with each advisor. And then which topics are included. So can you look at my cash flow and budgeting? Can I ask you about loans, whether it's student loans, auto loan, refinancing my mortgage? Can we look at my investments? Can we talk about estate planning of various types, not just the tax stuff, but also getting the medical directives and whatnot in place? Can we talk about education funding, helping whether it's your kids, somebody else's kid, grandkids, that kind of thing? Real estate, insurance, all types of things. Ask them exactly what might be included in a financial plan. Next is to ask, for asset management, if you're going to have somebody manage your money, you can ask them, what is your typical client size? Is my relationship relatively big, small? right in your sweet spot. Just help them tell you what you might look like in terms of their typical client profile. So there's no right or wrong answer here, and this isn't like comparing yourself to others in the bad kind of way. It's just to figure out if you will be, one of their largest clients or one of their smallest clients, and that doesn't mean that advisors would ignore you, but it's helpful information to have, and it's a nice conversation to have as you learn more about your advisor. Next is, will I work with you directly, the advisor, or will I be working with a junior advisor? Will I be working with an admin person? That type of thing. So, it's not unheard of for an advisor to have administrative help who can guide you through some paperwork and do some of the logistical things with you. But the question is, who's going to be giving you the advice? Who's going to be reviewing your accounts? Who's going to be creating your financial plan? Who's going to be making the decisions on what kind of guidance you get? That's just important to know. Again, not a right or wrong thing, but I think you'll want to know that. Okay, and just a couple of bonus questions here. One is to ask about references, and that can be a problematic one. So financial advisors are typically not allowed to use what's called testimonials. There are regulatory rules that prevent them from doing that. So a lot of advisors will say, I unfortunately cannot give you client references. And if you think about it, they're only going to cherry pick and give you people who are going to say good things about them anyway. So that's a tricky one. I would say a lot of advisors are not going to give you names of people or have people call you and contact you and say nice things about them because that can be getting onto thin ice in terms of what the regulations are. Some people might do it, but if you ask that question, you're obviously asking that because you want to find out if this is a competent and trustworthy person, and that is completely understandable. Other ways to maybe kind of figure that out in a less direct way are, as you're having these conversations with an advisor, look at how they're answering you. Are they telling you the truth? Or are they dancing around things? Are they actually answering the questions? Are they putting some thought into where you're coming from and what you want out of it? Or are they just trying to sell you something? You can also look for what might be called social proof. So can you find out anything about these advisors? Are they in the news? Are they quoted in major media publications? Are there other sort of signals or indicators that kind of suggest that others have kind of vetted these people and think that they might be competent and trustworthy? So it's a tricky one there, but that's why it's tricky, is you have a testimonial rule, and again, people are just going to cherry pick. Next is, what are my all-in costs? That's a good question. Is, if I do invest with you, you might charge me a fee of X. Are there other fees and expenses? So there might be underlying mutual funds or ETFs that your money goes into. And what are the fees and expenses on those? That's important to know. Might be high-cost products, might be low-cost products, just something you want to find out about. And we'll close it out with, what is the tax hit that I would take by working with you? So again, this is only if you decide to move assets over to a financial advisor. Well, if you have some investments that are in taxable accounts, like an individual account or a joint account, if you have to sell what you own and then put it into different investments, you might have tax consequences, capital gains, that sort of thing. So you want to discuss that with the advisor. They may be able to, help work with you on that, to maybe spread that out, or to make it as painless as possible, or work around certain positions that have a big gain in there, but they need to make sure it fits with your overall portfolio and goals. But what you don't want to do is just find out down the road when it's time to do your taxes that, hey, you had a huge capital gain because of this move. That doesn't make anybody happy. So I hope that these questions have been helpful. I hope that you've learned a lot. I think that if you have a discussion with an advisor and you talk about these things, you're going to learn a lot. You might not even understand what all the answers are that they give you, but most importantly, the way that they're answering you, if they're being direct or if they're dancing around things, I think that'll tell you a lot of what you need to know. And again, you want to look things up for yourself. You do want to check out that regulatory background. You want to do some searching and some digging on your own, but asking these questions helps you learn a lot about a financial advisor. So I hope that's helpful. If you want to work with me, if you want to ask me those questions, please feel free to do so. I'd love to chat with you.